Welcome to the end of day review for Friday, the 23rd of February 2024. Starting off with the economic calendar, as you can see, there are no red folder news events. There was a medium impact news event before the start of the London session, so that didn't really impact our trading decisions for today. Then moving on to the chart, starting off with the daily, we know we are in a bearish market structure. In addition to that, focusing on the daily consecutive bullish candles, we have 3 consecutive bullish candles up to Thursday, and then today is expected to be, or at least Friday was expected to be, a bearish day. However, that didn't happen. However, we did actually create a large wick. Then moving on to the 4-hour. From a 4-hour perspective, we again can see that we had the 4H change of character and then a break of structure validating that we are in a bearish trend. Last week we had the pullback phase validation and extinguishment because the pullback phase achieved its objective of reaching the pro-trend extreme. Once the pro-trend extreme was reached, the pullback phase ceased to exist once we broke this 4H last point of supply pullback phase OB that then validated the pro-trend primary leg. However, at the same time, what then happened was that we had this unconfirmed higher low right here. We had that unconfirmed lower high. Perhaps I can just mark this out. And the reason why we say it's an unconfirmed lower high is because it failed to take out the 4H swing low. Because it failed to do that, although we were only focused on shorting, what then happened is, from a 4H order flow perspective, supply failed and demand held. So we got demand in control, and once we had this break of structure validating that demand is in control, we were essentially in an unconfirmed state again, because there's both reasons to short from this pro-trend OB right here, as well as reasons to long from this demand control. Because of the unconfirmed state, we invoked the unconfirmed trading rules in the sense that we needed 3 variables to ensure or back any trade ideas. The first being substructure validity to target, validated substructure that is to target, a 4H OB to back a long idea or a short idea, and then lastly, on the trading time frame, internal range liquidity to the intended target. However, having said all of that, what then happened on Thursday is that we actually weakened the unconfirmed lower high, achieving the target and setting a new swing lower high while stepping deeper into this pro-trend extreme OB. That then gives us the necessary validation and scenario to then enable us to continue shorting with the objective of targeting this 4H swing high. From a pullback phase primary leg, because we didn't have the 4H body break at this point in time, the pullback phase wasn't extended, and thus there was no concern that the pullback phase last point of supply will hold and take us deeper into this pro-trend extreme. However, that then brings us into Friday morning, which occurs right here. Remember, at this point our bias is purely to short because of what I just said. However, what you can see is that majority for Friday we pushed to the upside, actually body breaking this unconfirmed lower high and extending the pullback phase primary leg. However, the pullback phase primary leg last point of supply is likely to be in and around this area right here. So there was space to move before we reach the pullback phase last point of supply. However, remember, because we in a pro-trend confirmed state, we can trade shorts unlimitedly, and any counter trend plays will require 4H backing. Having said all of that, we knew that we were highly biased to the short side, in addition to having the daily consecutive candles, which gives us a daily bias to short as well. So let's move on to the charts, starting off from the Frankfurt session. Essentially what we saw in the Frankfurt session was that the Asia high of the day was taken out, leaving the low of the day intact, and that essentially gave us a strong target and enabled us to be a bit more aggressive should the opportunity arise. What then happened is that Frankfurt failed to make a high of the day. London made a high of the day, but was not validated. um, by news. Obviously, we had no red folder news, and in order for a London high of the day to be validated, we need New York to take out the London range. As you can see, London pushed to the upside. I think what's important to mention at this point is that the previous day we had the reaction to the Proton Extreme, creating this leg, and that leg made a previous high of the day, low of the day extension to the downside, and this is in the direction that we want to trade from. Given that I anchored my fib to this previous day low and the previous day high, identifying valid POIs to trade from, this being one and this being the other. However, setting an entry here required too large of a stop loss, and I decided that using this range POI was the best bet, and thus I set an order here. Obviously, what you can then see is that the order was triggered after the London low. Under normal circumstances, what that would mean is I would have cancelled this limit order. However, because we still have this Asia low target validating more aggression, I simply left this order on, and then you can see that that was tagged, and whilst we didn't actually reach this target, we did manage to take out 1 hour from the market by closing at the end of the session, which is the usual optimal exit time. In terms of finding an opportunity to trade in New York without this order, it essentially was not possible, given that the London high of the day, or rather the lull high of the day, could only be validated once New York took out this low right here, aka the low of the London range. But as you can see, that never happened, and you wouldn't have been able to capitalize on any of this downside move that was highly confluenced by the higher time frame narrative. All in all, a pretty good day. Lots of interesting changes in the market, especially yesterday and today. The complexity does make it interesting, while somewhat harder, but also rewarding in the sense of, getting your analysis right. So that's pretty much the end of day review. I hope you have a good weekend, and we'll chat again Monday morning for the London Outlook.